help you guys understand the market a little bit better through the product of bounce back, and then give you some tricks and tips on how you can personally trade on your own. So I'm about to share my screen. So let's get this party on the road. Make sure everybody's muted. Just mute all, and so we don't got that background noise. And does everybody see my screen? Just type a 1 if you see my screen. Yes, yes. Yes, all right, perfect. All right, so first things first, IML's bounce back. All right, so this product right here is one of our most popular products on IML's platform. So if you don't have access to IML bounce back, I suggest you do. Go to your back office, to the left, go to shopping cart, and add this product. All right, it's really convenient for beginner traders, intermediate, advanced, right? Especially those who are like struggling to profit on a day-to-day basis. This product will make your life a lot easy. All right. So bounce back consists of 3 master traders: myself, Lex Waves, and Javier. All right, Javier for the Spanish-speaking Latin community. Right now, this product, what it basically does, it's a scalper's best friend. All right, so it's meant to get you in and out of the market consistently, profitable, and making money on a basically everyday basis. All right, so how it works is bounce back will call out a trade opportunity, kind of like the harmonic scanner, except we made it more user-based. So it'll tell you the prices to get in. You'll basically enter the trade, and then you're looking to grab, anywhere between 10, 20 pips and, call it a day. We want you in and out like a bank robber, right? So the thing is, when it comes to softwares, you always want a system around it. You never want to just buy and sell using a software. That's where a lot of people go wrong, all right? So what bounce back will do is it'll call an opportunity. So let's look at this opportunity on Euro AUD for a second, right? So bounce back's looking for a buy on Euro AUD. All right, so I'll call a trade on a time frame. So right here on the 60-minute time frame. All right, now what you want to do is you want to draw a trend line. And the reason why you want to draw a trend line is because you want to identify the current trend that the market is in. All right, now whenever you're drawing a trend line, now the valid definition of a trend line is identifying a trend in the market by 2 or more touches. And you usually can do that by the highs and lows, all right, what you see from that time frame. So what you want to do is you want to jump down 2 time frames. And the reason why you want to jump down 2 time frames, if bounce back is expecting a buy on the 1 hour, by default, it has to happen on the 5-minute, the 15-minute, right? You're not going to have a big explosive move on the 1 hour to the upside and then price going on a big downtrend on the 15-minute or 5-minute, right? If that uptrend is going to happen on the 1 hour, it's going to happen on the 5-minute, 15-minute. It's going to happen on those time frames before it hits the 1 hour. So we want to catch the move early. So what we want to do is we want to identify the current trend, right? So this is the current trend, right? This downtrend right here. And now what we're looking for is price to basically break this trend line, all right? Because if price is overall in a downtrend and we're expecting a buy, by default, it should break that trend line to the upside, right? So we need break of trend line, right? That's rule number 1. Rule number 2 is going to consist of this MACD. Now, the MACD is one of my favorite momentum indicators, all right? And the reason being is it consists of 3 components. It consists of 2 moving averages and a histogram. So it literally stands for moving average, convergence, divergence, all right? And the key to utilizing this product is this 0 line crossover, right? So basically prices, this MACD is going to help you know when a trend change is happening, right? So when market is in a true uptrend, the MACD is going to let you know. When it's in a true downtrend, it will let you know. So in order for us to get a true uptrend, we need a MACD crossover, right? We need a MACD crossover. So you see this downtrend right here? Now, this is where most people go wrong. They think because they see the blue line, which is called your MACD line, the orange line is your signal line, right? So blue line, MACD line, orange line is the signal line. And then, like I said, the one that looks like a mountain in the background, that looks like it's called a histogram. So that measures the strength of the uptrend. So basically, in a nutshell, when the two moving averages is above the zero line, right? It's above the histogram, you're in an uptrend. When it's below it, you're in a downtrend. So you're in a true trend, right? When the two moving average crosses and makes that MACD zero line crossover, right? When that zero line crossover happens, that's how you know you're in the true trend change. Now, some of you are saying, well, you're getting one right now. How come you're not buying? Because we haven't gotten a break of the trend line yet, right? Now, here's the thing when it comes to indicators. You need both, right? Indicators are never supposed to be used solely by itself. You need both components, all right? You need, when you're utilizing an indicator, you're supposed to use it in conjunction with something else. Never use it by itself. All right, never ever use an indicator by itself. Always use it in conjunction with something else. All right, and not just another indicator, your analysis on the chart. All right, don't use an indicator with another indicator. No, 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 no. An indicator aligned with what you see on the chart. All right, so if, for example, when this downtrend truly happened, notice, right? You had this small uptrend, and then it wasn't until the break here that the true downtrend began, right? True downtrend began. So we need a break of this trend line and a MACD crossover in order to get that true uptrend, all right? You can't have one without the other. So we need one or two things. We need price to hold and then continue going up, right? Something like this. I'm going to give you a perfect example. See how you had the breakout, price pulled back, and then went up again. So we need a scenario like this. Breakout, stay here, boom. Or it's either going to cross back down under, and then we need another MACD crossover. All right. No matter what, this crossover must be in conjunction with the break of the trend line. And literally all you're looking for is 10 to 20 pips, which bounce back will always produce. So like I said, if you're a scalper, this is your best friend. 10 to 20 pips. All right. Stop loss, always below previous low. So let's say this broke out, right? Let's say this broke out to the upside. So a candlestick closed above it. Your stop loss is below the previous low. So your previous low would be right here, right? Your previous low would be right here. If you want, you can go a little bit down here. Not down here. That's not where your previous low. Previous low. So let's say this shot up. Your previous low would be right here, no lower than here, right? Remember, you should never be risking more than what you're going after. All right, so we always have a tight stop loss. What I love most about bounce back is I've never had somebody hit me up and tell me they've blown their account. All right, so again, you want to jump down 2 time frames, identify the current trend, and literally all you're doing is lining up. You're waiting for price to break above your trend line, waiting for a MACD crossover. Your stop loss is going to be above or below previous low. Well, and you're looking for 10 to 20 pips. Yes, bounce back can go for way more. I've seen it go for 100 pips, 200 pips. But again, because we have so many new people coming in and trading is a process, it's developing of the mind. Most people cannot swing trade, position trade, meaning holding a trade for a long period of time. People have anxiety. People, you know, are looking at the chart every 5 seconds, right? So we wanted to make this tool very easy and friendly user for people because it gets them in and out of the market. So all you're literally looking for, 10 to 20 pips, cash out, and then boom, on to the next setup. All right, let's go over it again. do a couple of these. So sell on odd Swiss franc. So again, price called, bounce back called it on the 1 hour. All right. Now, in essence, you can take the trade when bounce back calls it. But again, you want to have rules because price could continue going up, going up. So if you entered at that current price point, you'd be in trouble, right? When you see it called it around 68,170, price is at 68,313. So you'd be in a drawdown. So that's another reason why we draw a trend line, right? So we're in an uptrend, drop down 2 time frames, identify the current trend. Now all I'm looking for is a MACD crossover, and I'm looking for a break of trend line. Again, what I mean, I need a candlestick, 15-minute time frame candlestick, right, to close below this trend line. I would now enter the trade. The moment it closed below, I get in on the next candlestick. My stop loss would be above previous high. So let's say price just dropped where it's at right now. So my previous high would be right above here, right? Previous high. And all I'm looking for is, again, 10, 20 pips. I get my MACD crossover. All right, crossing over that 0 line, just like I had a crossover over here. Boom, boom. And then I have a clean trade, 10, 20 pips. Literally. And that's why so many people are winning with this product, right? So some products kind of like do all the work for you, right? So like the harmonic scanner, we're going to take a quick look at that. And then we're going to jump into, you know, some strategies real quick. So they do all the work, but I've literally seen people get in a trade because it didn't hit that exact take profit, end up losing the trade. So again, we wanted to make this very user-friendly and allow the person who's trading to decide when they get in, when they get out, when they take profit. All we're doing is giving you the system on how to properly trade this. Now, if you're not already in it, make sure you're in the Facebook group. Big community. We have about 23,000 people in this group. All right. Growing every single day. All right. If you want to learn about any of the strategies, you can go to the videos here on Facebook. Right. I've pretty much done majority of these videos. All right. Pretty much going over the same strategy I'm teaching you right now. All right. And you can post all your profits. You can ask any questions in the group. People will always there to answer it. Like I said, we have about 23,000, something like that. And people just posting profits every single day, right? Like, look at that. Person proud that they're paying for the product itself. I always tell people, if you're trading right now and you're losing, you might as well pay the extra 20 bucks. You've already paid $200 plus to join this platform. You're paying anywhere from $165 and up, depending on what services you have, what platinum package you have. You might as well get a tool that's actually going to help you make money. Point blank period. This tool literally does that, right? Like, I've never met this person. He posted 3 hours ago, right? Because somebody introduced him, took advantage of a product, and now he's making money. And he's happy to purchase it. Why not? Right? Some of you guys are on this platform and you're not making money, and it makes no sense. So you have a product that literally produces opportunities every single day, right? Every trade is valid for about 48 hours. And if a trade goes no longer valid and the parameters haven't been met yet, you can still take the trade, right? You can still take the trade. And all you're looking for is 10, 20 pips. 10, 20 pips gets popped out every single day, guys. 10, 20 pips is easy. If you have something that's going to help you easily grab 10, 20 pips, take advantage of it. Right now, we're in the midst of developing an app So once we get the app up and running, we'll let you guys know. And it'll make your guys' life even that much easier. All right. Very, very important. But that's literally it. That's the simplest. This is the simplest product that we have on our platform, right? So it allows you, it gives you the best of both worlds. It does majority of the work for you, and it allows you to perfect your skill set as a trader. So now it doesn't do everything for you, because certain apps where it does everything for you, you're not learning, right? Remember, this is an educational platform. We also want to teach you how to trade. So you get to practice drawing your trend lines. You get to practice knowing when change of direction and looking at the market to see when all those things are about to take place. So you're literally learning while having a tool that pretty much does all the work for you, and is going to consistently help you make money. All right. You can also do this on the harmonic scanner. I tell people this all the time. So the scanner right here, same thing. What a lot of people do, they apply the rules that I've given for bounce back onto the harmonic scanner. So the harmonic scanner does pretty much all the work for you. It identifies the pattern, tells you when to enter, stop loss, take profit, all those things there, right? So if I apply the same rules, so I'm going to identify this trend. Boom. And same thing, I'm looking for break of trend line. Price to break trend line, and then I would remove the RSI. I prefer the MACD, and the reason why I prefer the MACD is because it's giving me the best of both worlds, right? The RSI, the best time to use it is when price is in consolidation, because when price is in a trend, so for example, this trend right here, this downtrend, that's why I'm not particularly a big fan of the RSI. So this downtrend, how the RSI works, you guys should already know, is that you're looking to buy and sell when price reaches these overbought, oversold territories. All right, that's cool. So in essence, you would think, all right, as soon as price hits overbought, oversold, I'll make money. All right, here's the problem. Look, price is oversold. So that means you would have bought right here. Look what happened. Market continued to go on a downtrend. Oh, let me buy again because price is oversold. Oh, look what happened. Price keeps going on a downtrend. Comes up a little bit. Price tells me to buy again. Look what happens. Oh, price keeps going on. So this is a loss, loss, loss. So 3 trades right here. Keep losing, 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 losing. Right? And notice my MACD. Right? Where is this? Where is my toolbar? So notice my MACD, right? The entire time, price was in a downtrend. As soon as it made that crossover, look, downtrend. When the RSI was telling me to buy here, when it was telling me to buy here, right? When it's telling me to buy in all these areas, and I would have kept losing, 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 right? How does that do that? And I kept losing, losing, losing. If you look at my MACD, I was in a downtrend this entire time. It wasn't until I got this crossover right here that price really started beginning to go up. So that's why I prefer the MACD over the RSI, but some people like it. But same rules, right? If I apply trend line, again, I'm looking for, how do I get this off? There we go. So if I'm looking for if I'm looking for to sell, by default, I should get this MACD crossover, right? Break of trend line, MACD crossover. Now I'm comfortably selling. And then again, the harmonic scanner, great for scalping. I already got my take profits here. Another thing you want to also consider when using the harmonic scanner, success rate. Yes, that's right. There's certain patterns in the market that you want to confirm, right? So there's different type of patterns. You have the bat patterns, you have the deep patterns, you have sharks, you have butterflies, all these type of patterns. I want to take the highest one with success rate. So the butterfly, 88%, the bat, 90%, the Gartley, 88%, the crab, 90%. These are the 4 that I really want to focus on. I don't want to focus on the shark. I don't want to focus on the other patterns, because why? These produce the most success. So now guess what? This tool is even more powerful to me. Guess what? I got a bat pattern. So it just told me 88%. So there's an 88% success rate just with this pattern alone. Now I put in my little strategy, wait for the break of the trend line, wait for MACD crossover. Now I have a winning system. Make sense? This is how you want to trade. The more you understand what's going on in front of you, guess what? The more successful your trades will become. The reason why most people fail with trading, they have no idea what's happening in front of them. Understand what's happening in front of you before you buy or sell. That's why I'm always preaching that on my sessions. If you're not on my sessions, make sure you're on my sessions, Sundays and Tuesday nights. Sunday nights at 9 p.m., Tuesday nights, 10 p.m. Eastern Standard Time. I'm actually going to go on YouTube a little bit later, so if you want to join me for a little advanced session, you can. I'll probably go on in a few hours. But the more you understand how this works and patterns and the indicators and all that stuff, the stronger of a trader you will become, right? Like the saying goes with swords. It doesn't matter, swords, karate, it doesn't matter which sword is the best. You can have the strongest steel in the world. It's the user, right? Like the saying goes, a sword is only as strong as its master. Every martial arts is powerful. Kung Fu, Taekwondo, karate, whatever you use, right? Jiu-jitsu, all forms of martial arts, it all depends on the user, right? So all strategies work. You just got to know how to properly use it. All right, so let's go over some quick strategies when you're trading on your own, guys. Now, I'm actually looking at this setup right here. Got a great setup on Great Britain CAD. A lot of the Great Britain pairs are due for a big correction, right? So we got a big downtrend here. Pretty much no pullbacks, all right? What I just used here was my Fibonacci tool from this high all the way down to this low, all right? Now, when it comes to fibs, I have a rule. Price usually will retrace 50 to 60%, 61.8. So that means somewhere along the line, price will retrace back to these levels. All right. So knowing that when you're utilizing fibs, knowing that. Now, it doesn't mean it's guaranteed, right? You still have to use this in conjunction. Remember, a tool is only useful in conjunction with other analysis. All right? Using it with other forms of technical analysis. So why am I looking for this bullish run? Well, when I look left, what do I see here? I see a lot of bullish momentum. Move to the upside. Starting from here, move to the upside, move to the upside, move to the upside, right? All these moves to the upside. So that means there's a strong case for this to reverse and move to the upside. That's number one. Number two, so whenever you're about to buy or sell, always look left. Always look left. Whenever you're about to buy or sell, always look left. All right. Number two, look at the pattern that's being created when price hits that major zone. So here we have a major level. Major level. You can call this support or demand zone. Demand is more like it because this is where buyers pretty much enter the market. Now, if we go back in the past, look what price did before it made that big move to the upside, right? What did price do here? What did price do here? Look at the sharp, strong impulses, right? Sharp, strong impulses. All right, let's zoom in, right? The market loves to repeat itself every single time. The market will repeat itself, repeat itself, repeat itself, repeat itself, repeat itself every single time. So if you notice, when price was coming on this downtrend, we had reversal patterns forming that led price going on this uptrend. Reversal patterns forming that led price to go on that uptrend. We go all the way back. All right? And when you're trading on your own, and if you're really serious, you're taking, you're doing your due diligence. You see that? Look, reversal patterns every single time. Price before it takes off. So now, what's happening over here? We have a reversal pattern forming. I always say this: if you can't identify a pattern before buying or selling, you shouldn't get in the trade. If you're personally trading on your own, you're not utilizing those softwares to help you or anything like that. When you're trading, here's a key nugget. If you cannot identify a pattern, you shouldn't be buying or selling. What do I always say? If you watch me on my sessions, I'm always looking for certain patterns before I buy or sell. I have a reversal pattern for me. This is a clear reversal pattern for me. This is a clear reversal pattern for me. Because guess what? Price is no longer dropping down aggressive anymore, right? If you look at when the market is dropping, look, they should be sharp, right? Market come down. Look how sharp it comes down. See that? See how sharp it comes down? And then when it got here, it started to like slant to the side, right? Same thing here. Kind of dropped. Gave you a bearish flag. Dropped. One more bearish flag. And then look what happened. Straight reversal. No more bearish flag. Right? So the market talks to you. See? It drops. And then look what it did right here. See how it slanted? Which led to that reversal. The market literally talks to you. It will let you know that a buy or a sell is coming if you pay attention. All right? If you pay attention. You know when a flag is finished based on two components. So, for example, this bearish flag right here. Now, if you can't trade naked, so my suggestion is if you trade naked without any indicators, all you would do is wait for the breakout. When a flag is being created, you should notice that price is just consolidating in the same range. It's like ranging. Price is just ranging back and forth. So you need price to break out of that range. So you could have traded this flag in two forms, right? You could have gotten your entry here at the breakout, a strong bearish candlestick here. So your stop loss would have been right above here, and then that would have been your move. Or using the MACD in conjunction, when this flag was being created, look when price was starting to make that crossover. So once price crossed over down here, that's when you got your breakout here. This, again, would have been your entry, right? On the 4-hour time frame, Now, here's the thing. When it comes to entries, you should never, ever drop down more than 2 time frames. So if I'm on the 4-hour, I don't want to drop down no lower than the 30-minute. So the 30-minute would be where I'm entering the market. So if I go back to that same area where we were looking at that flag, right? I got a bunch of flags here. Let me scroll back. Let me scroll back. That's it. Oh. Where is it? Where is it? That's over here. Where's that flag? Where's that markup? All right. Let me get another example. So let's say the downtrend. Perfect. Right here. That was a flag. Down move. Boom. So you see here, I'm already in a downtrend. Right? See when this is flagging up? Using my indicator, I let this come back to the 0 line crossover. Right? One or two things going to happen. This is going to cross over and go on a complete uptrend, or it's going to cross down. And now move to the downside. All you have to do is wait. The market will tell you what it's about to do if you wait. The problem is with most people, you guys don't like to wait. You guys like to think you know when a flag is over. Let the market tell you. The market will tell you when a flag is going to be over. So again, if you can't trade naked, naked means without indicators, without using any anything. If you can't do that with indicators, life should be easy. So if I see this impulse and this flag right here forming, again, I got the drop. So I got my crossover here. Now I'm waiting for a pullback, back to that 0 line crossover. See how this lined up? So after this broke down, remember the MACD is not going nowhere unless price moves somewhere. This would be my entry. I get another little flag right here. I wait for the same thing. Remember, this moves only when this moves. Once this cross back over again, that's my entry for my move down. It's the same thing. And again, whenever you identify a flag, doesn't matter on a 4-hour, 1 hour, it doesn't matter. You don't jump down no more than 2 time frames. All right? So once again, before you buy or sell anywhere, you should always identify a pattern. So you guys should be looking at Great Britain CAD. This is like a free trade setup. I'm actually looking at this. We're looking for a retracement and a big buy coming up within the next week or so. I'm looking at a 500 pip move to the upside, right? So it takes about 12 days, probably a little bit more, right? Give or take. But this move is going to happen, right? So you got to ask yourself, can I wait 12 days to gain 500 pips? We're already at the bottom. Great Britain CAD's already made a big move down. We're in a strong level of demand zone. Look left. Every time price was in that area, price shot up, price shot up, price shot up. Right? I got a reversal pattern that's telling me that we're going to go to the upside. Remember, every time price reaches a key level, there's always a pattern that's formed that's going to let you know that we're either going to continue going to the upside or we're getting a reversal. So if this was going to continue dropping, we would have gotten a what? A flag pattern. Something like this, letting you know that price is going to continue dropping down. But we're not getting that. We're getting slow momentum. If anything, this is telling us that we're getting a reversal. So this is a key area of where you want to look to buy, right around here. Price probably dropped down a little bit more, nothing too crazy, probably another 40, 30 pips, but look for this to go to the upside for sure, 100%. So Great Britain CAD should be on your radar. And I talked about this last night, Great Britain Swiss franc. I'm actually already in this trade, in a buy. Same thing. This wick right here, right? This is where buyers have entered the market. Now, using my fibs. And now whenever you're using fibs, you always want to grab it from every impulse, right? So what do I mean by that? Every impulse of a leg. So you see how price just goes strongly up or down? That's where you want to utilize. So if I was to draw my fib, I'm going to draw my fib from this leg. So I'm going to grab it from this leg up, from this low to this high. From this low to this high, right? If I was catching a downtrend, see that strong move just straight down? Right? I'm going to take my fib from that high to that low. From this high to this low. Right? Every single time. Right? That's how you want to draw your fibs. So I'm going to draw my fibs from this high to that low. Why this low? Why not lower? Because when I look left, look what happened. Right? Now, if we look in the past, what happened over here? What caused that move to the upside? Same thing. Notice when price was coming down, we got a big consolidation. We had a big, huge move up. Bullish flag, right? Lines up right there. And you see how this MACD starts to move to the upside? Lines perfectly up with price. So when I look over here, we're in a strong demand zone. I got a nice reversal pattern. And same thing here. I'm looking for this to go all the way back up to the 50, 61. So another 500 plus pip move to the upside. 500 here, probably 600 if it goes to the 61. All right. Always, every single time, no matter what, whenever price is in a key area, you will always see some type of reversal pattern. See here, big move up. Notice when the market is going on an uptrend or downtrend, it doesn't go up like this. Look at when the market goes on an uptrend, a real uptrend. See that? See how price goes up and then it makes those pullbacks and then continues up. What this is doing right now is the same thing that happened over here. See how that slanted going up? And then what did you see happen afterwards? Boom, right? What did you see happen afterwards here? Here. What do you think is going to happen here? It's just identifying patterns. So I look over here, I see a pattern forming. Now I'm looking for a sell. And that's literally it. All right, guys. So does anybody have any questions before I close this out?
I think they're good. I think everybody's good, unless they have any questions. Anybody has any questions? No, I think they're good, Steven. Appreciate your time, man.
All right. Awesome, awesome, awesome.
Appreciate you, man. I hope you have a great day, the rest of your day, and I look forward to seeing you very soon.
Absolutely, absolutely. I appreciate being on this call. Hopefully you guys got a lot of value out of this. Make sure you plug into IML's Bounce Back. Again, man, it's a great tool, whether you're intermediate, advanced, whatever. It's just a great, great product to utilize. And then hopefully some of these nuggets will help take your guys trading to the next level.
Give me some points.
We got one question. It's he says, in terms of swing trading, how do you know if the move is complete before the pullback?
Again, look left. Based on the size of the move, always look left. So what I'll do is, if I'm looking at like this Euro, Great Britain pound. I'm looking for a big drop. Last time price was there, look how big the drop was. Last time price was there, look how big the drop was. The market repeats itself. Look left. Right? So if this move, last time price was there, was 500 pips, the first time it was there was about the same thing, 400 and something. This one was about 400, right? So I can expect anywhere between 400, 500 pips. Just look left. Always look left to see the size of the move. That's why I know pretty much those pairs that I just gave you, Great Britain pound, Great Britain Swiss franc, they're going to go on those big buys. Why? Because look left. Because this went up 900 pips, actually 600 before a pullback. I look further left, right here. Price went up about 800 pips. Look left.
Awesome. Well, guys, I appreciate you for coming on tonight's call. Super grateful for you, Mr. Stevenson, Lindor. I know you usually talk to hundreds or even thousands of people, so definitely super grateful for you for coming on tonight's call. And I look forward to seeing you at the Dallas convention at the IAM. So super excited to meet you.
Thank you very much for having me, guys. Take care, stay blessed, and I'll see you guys at the top.
Definitely. Guys, if you're not on IML Bounce Back yet, make sure you get that tool. That is one of the most duplicatable tools that we have here with iMarkets Live. And take the information that you learned tonight and apply it into your trading. And I'm sure your trading will go to the next level. So guys, have a great evening. I look forward to talking again very soon.